Hey, everybody. Thank you all for being here. It is that time of year. We are on the eve of New Year's Eve, I think, at this stage. And we're going to talk about the state of Bitcoin, where it is. And we're going to talk about the state of Bitcoin. We have volume. Always good to check that. And look at history. Look at the last 12 years of history. Look at other assets over the last 12 years of history. Look at diminishing returns and a whole bunch more. This will be an interesting journey that we go through. But remember, before we jump in, I've always said three things about this. One, of course, this is always edutainment, but the other three things are investing is a blood sport. Bitcoin mining and any mining is cutthroat. And, of course, crypto is the Wild West. But it is also fascinating. And it's been a horrible year. No need to iterate that. So let's just talk about it's been a tough year for Bitcoin, but it's also been an interesting year because we will analyze all the facets of how it's developed over the past year and over the past 12 years, and proof again that it is the hardest asset that I know of. Supply crunch is the reason kind of I'm in this. I don't know when it's going to happen. It looks like it may be a ways off, but when it does, that's why we play this game. And investing is a long journey. It's not a jump in 6 months, 12 months, get rich quick, etc. It's about placing your bets and waiting and making sure they're the right bets, of course, and always have those tap dancing shoes on. So let's jump into this. And I want to talk about this first chart. And this is the annual returns for Bitcoin over time. Now, it's so funny. I've seen this kind of a million times. So one thing occurred to me, and that was if we compare 2013 to 2017, you can see the big gainers came 4 years later. But when we look at 2018 versus 2020, it's different. And it's as if the market peaked early. So if you look at 2016, the returns were 124.95%. The analog for that year should have been 2020, but that was 300% returns. And 2021, which is the analog for 2017, only had 59% returns. So, people say, oh, this time is different. The most dangerous words in investing, but this season has been different. Now, I know we had a lot of interesting things happen during 2020, like the C19 dip, but that had no impact on the overall returns. But it did get attention. So the question is, what's going to happen in 2023? Will people front run that they know is going to happen for the halving? I don't know. But let's look at some more data. Let's look at a whole bunch of assets compared over the last 12 years. Let's look at gold versus bonds versus stocks. So the very top of this chart is the S&P 500. Big thank you to Bitcoin Pro magazine for this illustration. And then the next one is TLT. Consider that bond market returns. And then at the bottom is gold. So at a very crude analysis out of the gate, I looked at the left as the number of years that these assets were positive over the last 12 years. The S&P 500 had 8 positive years. TLT bonds had 5 positive years, and gold had 6 positive years. Let's go to the right-hand side. Red years, down years. S&P 500 had 4 down years. That's interesting because the correlation is somewhat there with Bitcoin with the 4-year cycle. Unbelievable. Another finding, is looking at these histories and charts. I just think it's fascinating. Then 7 down years for bond market. That is kind of surprising. And 6 down years, basically half up, half down for gold. So, what does this all mean? But let's dig in a little bit further and let's break down the actual returns. So this one's a little bit unfair because we're comparing Bitcoin to the other assets. And as you can see, Bitcoin has trounced all other assets over history. But what you can also clearly see is the returns are diminishing. 2013, what a year to be alive. Nearly 6,000% return. 2017, not bad. But 2020, not huge compared to the past. But let's switch gears and just pull out Bitcoin and let's analyze the actual returns for the other assets. You can see here, in the years where the S&P 500 was typically flat, like 2011, bonds and gold did well. But most of the time, the S&P is the blue box that has outperformed everything else. And you got some big down years as well, like 2013 for bonds and gold. And but gold also had a few good up years too. If we look at 2020, 2019, 2017, but again, balanced off with a lot of down years. Now let's look at the 12-year returns for these different assets. You can see the 12-year average return per year. S&P 500 is up 10.71%. Remember, your currency is debasing very dramatically. So when you divide the S&P 500 by the growth of money supply, it's a nothing burger. But if you do that to the bond market or the gold market, you're toast. You are very negative. But bond market up on average 2.18%, and gold outperforms the bond market. But again, if you take away the debasement of your fiat currency, you're losing money in both these asset classes. And then Bitcoin average return is 727.68%. But ladies and gentlemen, do not expect that to continue. We are in the era of diminishing returns, which is what happens with these very disruptive assets. So let's look at the Bitcoin holders right now. In this current Bitcoin cycle so far, the market has seen a peak supply and loss of around 55%, corresponding to a majority of the coins in circulation being underwater. And from the chart, it's apparent that this indicator also saw an uptrend as the 2018-2019 bear market marched on, and it peaked above a value of that 60% during the C19 Black Swan event as well. Now, the other key thing to really point out from this chart is despite the plunges and all the crap that's happened with 3AC, bankruptcy, FTX, yada, 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 you can see we are not as bad as we were off in 2018 and the C19 supply loss of 60%. So I think 2018 it was up a little higher than 60%, and C19 was about 60%. So that's where we are. So a lot of people would look at this and say, well, we have more to go, but you have to balance diminishing returns with diminishing drawdowns. Perhaps. We don't know. But I think if it wasn't for the series of black swans, we wouldn't be where we are today. But people are still rattled. People are still uncertain. And in fact, these guys especially, these are the million plus whales that are out there, the people that own more than $1 million worth of Bitcoin. And in today's money, it's not as many as it used to be. But it's interesting, and this is from Sentiment. It said Bitcoin whales are showing little interest in dumping or accumulating. They're just sitting tight, and the activity in their transaction rates is at a 2-year low. And what this basically means is many believe, okay, they're kind of asleep at the wheel, but they're not exactly selling. They were doing a little bit of accumulation, but now they're just, activity is dead. It's like flatlined, just like the volume of Bitcoin in Christmas. The volatility is also very flat. And many believe, though, that if this does continue to slide and a spike occurs, this historically is a bullish signal as we go forward. So again, watch for the whales, wait for them to activate, because that will tell us where we go next. Now, speaking of people placing bets, this is the Friday expiry for options action. This is a big one. A lot of money on the table here, and the bears could secure $340 million if Bitcoin closes between, it has to be between 15,000 and 16,000. So the 700 call options versus 22,500 put options. So the market is so bearish. It's quite remarkable to see that type of put call ratio for that strike range. If you go between 16 and 17,000, you got 2,000 calls versus 16,500 puts. Again, favors the bears by about 240 million. So the question is, we're about 16.6 right now on the Bitcoin price. Will we get above the 17? If so, the bears start to lose money. Not as much as they gain, but we'll see. And then between 17 and 18,000, it gets a little more balanced with 7,500 calls versus 13,600 puts. And between 18,000 and 19,000, you got 12,100 calls versus 11,300 puts. And the net result is balanced. But I don't think we're going to be above 18,000 by tomorrow. So it's very few hours left for this. But it's interesting to see that sometimes the option action can be a very good indicator of where the price goes. And if we do use this option action, look out to March, it looks very positive for Bitcoin price. Now, let's talk about a bit of history and look at news. And one of the things that we can clearly see is there's been a lot of good news in 2022, but the market hasn't really reacted to it. We know about kind of the bad news, so we'll kind of ignore that, like Grayscale, Tesla selling, Poolin, halts withdrawals, FTX collapse, etc. But if you look at the good news, and that's what I'm going to focus on here, the top box on the left, ConocoPhillips announces Bitcoin mining project, and then followed by Exxon announces Bitcoin mining project, and then MicroStrategy borrowing from Silvergate. We all know SI is in the news lately. Then you got Coinbase and BlackRock deal. They launch their Bitcoin private trust. Then you got Strike raises 80 million, which is a Bitcoin startup. Then you got Cash App adding Lightning Network support, and Shell announces a Bitcoin mining project. So the three biggest oil companies, apart from Saudi Aramco, are in Bitcoin mining right now. This typically should be huge for the space. And again, just wait until the day where oil is traded in Bitcoin. Wow, that could happen next year with the steps that the Russians are taking that I covered previously as well. Let's talk about some other news. Let's look at Bitcoin entity growth is slowing, still growing, but the pace of change is slowing. So if you look at the actual Bitcoin entities that are growing, it went from 21.5% in 2018, 23% in 2019, 22% in 2020, 22.8% in 2021, and 17.13% in 2022. This is also reflective of the typical bear market action, but this is the slowest entity growth in history of the Bitcoin chain. Again, diminishing returns, diminishing entity growth, but that could spike. I think, roll on the CBDCs, that could drive an awful lot of traction to the Bitcoin space as we go forward. It already is in certain places like Nigeria. So let's look at cohort accumulation. We're just going to look at the holders under 1 Bitcoin. You can see, and remember everybody, one holder, one person may have multiple wallets, multiple places where they have planted their Bitcoin. So don't think of this as there are 970,000 whole coiners. There are not by any stretch of the imagination. Then those with about 0.1 Bitcoin, 1 Bitcoin is about 4.18 million. And it's nice to see the gradual progression and the accumulation by all these cohorts. And then those with 0.01 Bitcoin to 0.1 Bitcoin is now 11.3 million. When you add up all these together, you have a good chunk of 15 million people or so that have at least 0.01 Bitcoin to 1 Bitcoin to the names, which is good because we want to see much wider distribution as we go forward. Let's talk about cumulative transfer volume. I know this is a little bit controversial as a subject because technically I could send my Bitcoin from one wallet to another all day long and it would be transfer volume. But again, it is a good indicator of growth of the chain. And this year, Bitcoin crossed over 100 trillion in cumulative transfer volume, with roughly 105 trillion having settled on the network in total. And this is an amazing feat in such a short window of time, illustrating how many millions around the world have utilized Bitcoin as a global settlement network. Just imagine again, going back to oil, if oil starts getting traded with Bitcoin, that transfer volume is going to go parabolic. And that could mean rocket boosters on. We don't know when it's going to happen. Maybe one day, hopefully soon. Let's look at the transfer volume breakdown as well. It's not as high. If you look at the top, you look at it in Bitcoin, not in dollars. You can see 904 million Bitcoin were transferred in 2016, but that was only worth $460 billion. But if you look at the dollar value transferred in 2022, it's 14.8 billion, which is, 14.5 trillion. That's 14,000 billion. But that's only 556 million Bitcoin versus 900 million Bitcoin in 2016. So again, you got to look at things in terms of how they are denominated. But at the same time, the actual dollar amount is staggering and growing as well in Bitcoin terms since 2020, which is also a positive for the network as we go forward. Let's talk about this. This is Bitcoin versus crypto market cap. As we talk about a lot, Bitcoin dominance is solid at around 40%. But if you look at the top chart, the light blue line is kind of flatlining a little bit, hovering around that 320 to 350 billion dollar market cap. And the alts are getting smashed right now. There's no doubt about that. But they are still holding their own. Again, still representing, including stablecoins, nearly 60% of the total crypto market cap. But if you look at the bottom pieces, the drawdowns from all-time high of the total CMC, it is big, now at 73.38%. So in terms of that, Bitcoin is down about 65% from the all-time high. You can see that Bitcoin has been outperforming altcoins as we go forward. Let's talk about Bitcoin balance on exchanges. This one here is interesting, and it's still amazing to see that people still have their Bitcoin on exchanges. But according to Bitcoin Pro magazine, it's about 2.2 million Bitcoin are sitting on exchanges currently. And that has come down from 2.8 million last year. And the all-time high in 2019 was about 3 million on exchanges. And as a percentage of circulating supply, remember the supply is growing over time. This balance of 2.2 million is a lot less than 3 million was when there was a lot less supply circulating back in 2019. So the amount on exchanges is about 11.6%. And US dollar value about 37 billion. Again, the price of Bitcoin has fallen, therefore that amount has fallen. But it's important to always to denominate everything in Bitcoin as we go forward. Again, that 11% on exchanges. If that dwindles down to, say, 5%, that'll be the time where the fire alarms go off and people say, uh-oh, this is very scarce right now, ladies and gentlemen. Everybody get some. And then we're waiting for that supply crunch. It's coming. We just don't know when. Next in the box is the amount. Again, talking about hardness of Bitcoin. Bitcoin is harder than ever with now 92% mined as of yesterday. This is from Bitcoin Pierre on Twitter. And that is a stunning chart. But if you look forward and look at how little there is left to actually mine, we're talking about 1.75 million Bitcoin left over the next 110, 120 years. Again, staggeringly hard, staggeringly rare. So despite what a crap year it's been, everybody needs some Bitcoin for the off chance that there will be a supply crunch, which I believe there will. And once things like oil, etc. are denominated in, wow, off to the races. Now, a quick reminder about halving times and amounts mined for the next foreseeable future. Just to put some perspective here, you can see that the third halving was right after the C19 crisis hit, where the reward is 6.25 Bitcoin. We are going into the fourth halving. That's going to be sometime between Feb and May, probably April 2024, which is, 16 months away. Not too far. But when we get to that stage, nearly 97% of all Bitcoin will be mined. And that's staggering. And the reward will be halved down to 3.125 Bitcoin. And what the price will be on that day, I don't know. But it'll be somewhere between, I think, $40,000 and $60,000, I reckon, because everybody's getting wise to the fact, and people will front run it, and it's going to be an exciting 16 months coming up, I believe. If history repeats, remember, let's look at the delta between going from $12 to $650 to $8,800. It won't be quite a progression, but it'll be a 2 or 3x definitely from where we are today. Now, let's look at other things. This is the Bitcoin annual exchange flows. The amount being drained off of exchanges. In Bitcoin terms, you can see there was a net positive of 120,000 Bitcoin hitting the exchanges in 2021. Now it's down. Nearly 600,000 Bitcoin has been pulled off just this year alone. And that's worth nearly $10 billion worth. So again, the trend is continuing where these things get super, super scarce as we go forward. So hang tight, everybody. Let's look at security. This is the hash rate of the actual protocol, and you can see it increases. But one thing I do want to point out here, although it's a log chart and the increase may not look that dramatic, but it actually is. We are now at 218 exahash. Now, I did add an arrow for the red dip of hash rate. It only grew 22% in 2021. But you have to understand that was the year of the China miner shutdown, which shut everything down, including the growth in hash rate. Ever since then, it's been off to the races. And that, of course, makes it more difficult for the miners to make more money, especially with the suppressed Bitcoin price. But the miners are still making bank. Let's look here. You can see despite all the bad news and those miners that grew too fast with too much leverage, too much debt that are hitting the wall. But if you look at the total revenue in dollar terms, yes, they had a bumper year in 2021, making $16.7 billion. This year on target to make about 9.5 billion as we go forward. So it's not like it's catastrophic. It's a chunk less than the year before, but it's also double what they got in 2020. But in Bitcoin terms, you can see it's very, very similar. So let's break this down and analyze this a bit more. So I calculated the actual Bitcoin miner revenue in billions, starting from the beginning of time. You can see they didn't make very much until the year 2017, 2018, and then it kind of fluctuated or went down because of the fact that the Bitcoin price went down. Then 2021, massive year, and 2022, not bad. But let's break this down in terms of Bitcoin terms. And this is how much Bitcoin that they've been making. And you can see here, just like the halving, the reward is smaller over time. 2020 had nearly half of the year up until May. They were getting the full reward from the previous year. That's why it's kind of staggered. And then the rewards are kind of flat for 2021 and 2022 in Bitcoin terms. But again, there are so many miners, so many public miners scrambling to get their hands on this asset. Why? Because they know it's going to be valuable in the future. So conclusion, everybody, on the state of Bitcoin as we go forward. First of all, Bitcoin is alive and well. Good Bitcoin news is ignored. The $1 million whales are inactive right now. They're not buying or selling. They're kind of, enjoying their holidays perhaps. Transfer volume is up. Hash rate is up. Adoption is up, but it's slowing a little bit. Bitcoin dominance is steady at 40, and Bitcoin is becoming harder and more scarce over time, and the Bitcoin balance on exchanges is falling. And if Bitcoin is under 16,000 on Friday, which is tomorrow, the bears win. So that is the quick perspective of where we are. This is the hardest asset on earth. Everything is going in the right direction. Supply crunch will hit. We just don't know when. So with that, everybody, hope you enjoy the show. Thank you to the mods in the chat and everybody for being there. And be well, everybody. Talk to you soon. Bye.